Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. The second quarter and first half of 2023 trade comes to a close this afternoon. Joining me to discuss, we have Dan Deming, managing director at KKM Financial, to discuss these factors that could impact markets in the second half of 2023. Dan, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Thanks for having me.
You got it. It was a remarkable quarter for the first half of the year for 2023. I mean, so much between macro and moves that we saw in specific sectors and companies. It was quite impressive. What stuck out to you for the first half?
Well, I'd say the resilience of the economy, Joe, really is the one thing that stuck out. And I think the Fed continues to, observe that and, take steps to try to slow things down. Earlier in the quarter, even up as soon as about a month ago, the market was still pricing in a high probability of rate cuts as we move through the second half of the year. And now we're seeing that being taken out as the Fed is holding firm in their aggressive tone, their hawkish, steps to continue to combat the inflationary environment. And it has not necessarily had a significant impact on the economy at this point.
Yeah, that kind of is a head scratcher because Powell and company, they've been explicit with what their strategy is, and there is no hint of shifting it. And they were pretty clear in that core is the number that they're focusing on, which is over 2 times the amount that, that they needed to get down to. I think another challenge that we saw, not necessarily a challenge, if you look at overall index performance, it was the concentration in where we saw the rally. Do you think we could see some broadening as we get into the second half? Are we starting to see hints of it?
I think so, Jill. I mean, I think it would be good for the market if we did see this rally broaden in spectrum. And, certainly the small caps have lagged to this point, although this past week they've had a nice run. And, healthcare and consumer staples continue to struggle or underperform or show less relative strength here in the first half of this year. So I think if the market's going to maintain this upward momentum and hold on to these gains, I think we're going to have to see that aspect shift to support some of the stretch valuations we're seeing in some of the other markets at this point.
Let's talk some technicals here. When you look at the S&P 500, the broader market, what are some key levels that you're looking at? And of course, I want to talk about the VIX as well, still staying at these 3.5-year lows.
Yeah, exactly. The levels that we're watching closely right now at 44.50, and we're here today. This is a level that we kind of earmarked a couple of months ago as a possible top of this move, as far as when you look at from a technical standpoint. And here we are. So that's something that we're keeping a very close eye on to see if we're able to now hold what we view as a resistance area for the S&P 500. Nasdaq continues to show relative strength, and that's something that is going to probably most likely continue as we see the dynamic with the AI space and some of the other things that are unfolding there when you look at just the momentum and the structure of some of the leadership. The third thing I think is, we're looking at the Russell here now. As I mentioned, as we close out this quarter, the Russell is just shy of those mid-June levels, which are about 3-month levels as well. So another key factor moving into the second half of this year will be is if the Russell is able to maintain and also show some relative strength to support, I think, the broadening of this rally.
And as we start off the second half of the year trade, when we come back, well, actually on Monday, even though we have a half day, technically the second half of the year, but when we look at it longer term, July, how do stocks typically perform? And then what is your outlook for the second half? Where should investors be focused?
Yeah, just July is typically a very good month for the market. Historically, July has shown some outsized returns. And also from a seasonality standpoint, this is typically when the VIX is at its lows, just to do the dynamics within the market construct. And we're seeing that play out once again this year. So I think that that's something to keep a very close eye on as we move through July. Will this rally continue to broaden? And if it doesn't, then I would expect that we're going to see some hiccups in the second half of the year, particularly if the Fed does maintain this aggressive stance. At some point, there will be some reassessment of valuations, I believe, in the market. So those are a few things as we move to the second half of the year. Also, as far as looking at the dispersion of the market, I think, we'd like to see the consumer staples, healthcare, and some of these areas that from a valuation standpoint look to be undervalued start to show some signs of relative strength.
And speaking of valuation, these stocks are the concentration of stocks that have had quite the move in 2023. They're going to have to report very well, and they're going to have really good guidance to explain or to support that multiple expansion. I think that's going to be key as well. And of course, we start to get earnings in the next 2 to 3 weeks.
Yeah, absolutely, Jill. And one thing is a very interesting dynamic as we move into the second half of the year that I do want to point out. Historically, when you look at the Nasdaq, you think of it as a growth-oriented index, and it pretty much is. But some of these leaders now in the Nasdaq have shifted out of the growth area into more of a value growth type of stock. I mean, you look at Apple and Google, and the leadership there, with a lot of extra cash and the dynamics of them able to maintain this upward trajectory without leverage and cash access is something that I think is something that needs to be considered when you look at the interest rate environment, because as interest rates move higher, historically growth stocks underperform. That may not necessarily be the case because some of these names that we think of as growth are not necessarily really within that camp anymore.
All right, Dan, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.